Welcome back to the Daily Journal. So we are reviewing the 6 a.m. continuation model from Nasdaq's price action yesterday, that being Wednesday, the 12th of November. So on the 4-hour chart for my high time frame bias, as per usual, on Friday, price traded straight into this high time frame PDA. So I immediately looked to the left and saw these relative highs, as well as all these swing failures and these relative highs. So it was a one directional move into that high time frame PDA, and I'm looking for price to come and take out these highs, right, for this market maker bar model. Now, yesterday, looking at YM, you can see YM that played out perfectly. That is the most stunning example of a market maker bar model. So this was Tuesday's price action, and since YM had traded to the upside, it hadn't yet taken out these highs. I expected Nasdaq to play catch up, which it clearly didn't. So with these highs over here, that's what I was looking for, right? As my low-hanging fruit on the 4-hour time frame. Now here's the thing: price had already traded into this and had a sweep. So that was a reversal candle, and so that's the continuation to the downside, right? Continuation from this reversal, not of this trend. However, ES had taken out these highs and it continued trading to the upside. So I was looking for Nasdaq to play catch up. In the end, that wasn't the right idea. But here's the thing: you don't need to be perfect. You just need to be right some of the time, and you don't even need to be that right, because here it is on the 15 minutes. And let's just drop down to the lower time frame to show you my thought process as it played out in real time. So initially with that sweep, I was not interested because there was a small gap there, right? But that's deep in premium. I'm not really interested in that. But when price dropped down to this level here, I noticed a small volume imbalance. So let's zoom into this. So since we've expanded and price is trading into this volume imbalance with these relative highs above, given the high time frame market maker model as context, I would expect price to expand, retrace, and then expand higher. And if it is going to reverse from this level, I expect it to take out this level before trading to the lower side, right? The sell side liquidity, or this inefficiency over here in the form of the wick. So perhaps this is a counter trend trade, but nonetheless, when I drop down to the 50 minutes after seeing this reaction, right, I'm now looking for a 50-minute market maker model to deliver this idea. I'm trading from this 4-hour volume imbalance to this high, this previous candle high, and potentially above. Now here's the thing: with the close of this 50-minute candle, I can see this balanced price range, and immediately my eyes go to these equal highs. So for me, this is a real clean 50-minute continuation model, right? So that's my high time frame model that I'm working with. Never mind the 4-hour at this point. I'm just looking at the 50 minutes, delivering from this 4-hour volume imbalance, having expanded, leaving a fair value gap, also inverting this fair value gap over here, leaving behind these equal highs. And so with price expanding, now retracing into this, I'm dropping down to the 1 minute to look for a market maker model to deliver from this inefficiency on the 50 minutes to these equal highs on the 50 minutes. So we drop down to the 1 minute chart. And what I want to draw your attention to, I mean, look how clean those are, those relative highs are. In fact, relative and basically equal highs. So what I want to draw your attention to is that I initially was looking for this continuation trade from these lows. I only go to the charts sometime after 7, saw this expansion, dropped down to the 1 minute, saw that price had a change of state delivery over here. Looking at my standard deviation, I can see that price, the projection for the standard deviation was these equal highs. So I was really keen on this, because if this were to be the end of what I see now as a market maker model from this original consolidation down to sweeping this inducement, the 4-hour volume imbalance, change state of delivery, expansion. I'm looking for at the very least price to trade back up to this point and potentially higher if this is a larger market maker model. So even if I'm wrong, I expect these highs to get taken out in terms of my bias. However, going back to this point here, I initially looked for continuation, and this initial candle didn't give it to me, so I sat back and waited. Unfortunately, I missed that trade, which would have been really nice, but it probably would have driven me crazy because that's where I would have put my take profits, which it wouldn't have got. So anyway, the point of this is that this became my projected low, and the reason being is because price had traded into both this swing low and that inefficiency, and then closed above the opposing candles that swept that low and mitigated that fair value gap. So this is the range that I'm working within. So let's zoom in. Now, this candle is about to close, and so I'm looking for price to potentially form a reversal, and a reversal 50-minute candle, and I would need to see a 1 minute change in state of delivery to confirm a 50-minute candle to be a reversal. Now immediately my eyes go to this protected low and this inefficiency, because I'm looking for the 0.5, and there it is, smack bang on the money. Fantastic. So I'm just going to clean this up a bit. Look at that. So now I'm looking for price to confirm that it's going to deliver from this consequent encroachment of this wick, and then deliver to these equal highs. So I need to see a change in state of delivery, because it's a one directional move into that. So I need to see it delivering in the opposite direction now. So I'm looking for, and I mean, literally at this point, I've got my trade set up like this. Now, 1.3R is not enough. So I calculate my risk at the 0.5 of this wick, and it's 2R. So that's where I calculate my risk. I then dropped it a little lower just to give myself some breathing room. So once price closes, I got into that trade. It goes off to hit my take profits. But here's the problem. I got stopped at break even. So why did I get stopped at break even? And this is why your losses are so important, because that's the only way you learn. When price had traded to this 6 a.m. opening level, it got rejected. I moved my stop loss to this low, thinking it was a protected low, but it wasn't. And the reason is because I need price to trade into one of, if not two things: inefficiency, like a fair value gap, or specifically a fair value gap, or a sweep of liquidity. Or at the least, I need to see ES trading stats. Now on the 1 minute chart, it gets pretty messy with this kind of low liquidity condition. So I assumed that this was a protected low, and then moved my stop up to that low. It got stopped out at the tick. And that's just the way it goes. But here's the thing. As it began to journal, price started to trade up to the upside, having moved into this inefficiency, closed above, and I realized that my idea was still valid. So I got into the trade, but it wasn't, I needed 2R at least. So I immediately went to my standard deviation to project where this price, where this move could project to. And so that's what I aim for. And that was 2R. So let's see how the rest of that played out. Now at this point, once we had taken out these highs, and it's worth mentioning, the reason I was so aggressive on my stop loss is because ES had already taken out these highs. So I was very aggressive with my stop loss, paid the price. Those are my rules. Once my target's taken out with the correlated pair, my stop loss, I start going on into defensive mode. So at this point, once price had traded above these highs, that's my drawn liquidity has been hit. So my stop loss went to break even. Here it was. At this point, I thought, great, it's about to go and take profits. And the rest is history. So that's just how it goes. And in the end, the idea was right that price will trade up to these, and if it was going to reverse, it would reverse after taking out these highs. And price eventually melted down to the sell side liquidity at the New York Open, which is where I got A plus set up and ended green for the day. So yeah, check me out in the 10 a.m. continuation daily journal video, what's coming up next. And I'll see you guys then. Here are the executions from those trades. Here's that initial entry and the stop loss. I actually forgot to mention, I added on that continuation. So let's just look at that quickly. So at this point here, when price closed above this, having delivered from that inefficiency, I then added again, looking for, to add to that position. And so, yeah. Great, guys. See you in the next one. Cheers.